What's going up, y'all? So today I'm gonna make a video of standard deviation, how I use it, and how I've seen other people place it out. So we're gonna go ahead and start right now. So I went back a couple hours. So this is a replay mode on TradingView, not live. So let me find a session example to see if we can get a general idea. Damn, did ES actually create these relative equal highs? Okay, that's not it though. That's not what we're looking for. Okay, we could look for this, something like this. On the 15-minute time frame. Okay, so we have, I don't know if I should cut this back. No, actually, never mind. So generally, what you're trying to look for when to know if you have a valid standard deviation, you have to have a small little area of a type of accumulation. You guys can argue if this is accumulation. It is. It's bullish order flow that's happening, but I'd like to see like all these swings as also engineered liquidity or an entire market maker buy model. How you can tell also is just leaving all these gaps out. So standard deviation, we have a section of accumulation. We are pulling your standard deviation at a manipulation area. How to know whether the market manipulated? I usually just I see market, having its direction towards probably well, we don't have an external range of liquidity. Making all-time highs. Market makes all-time highs. We're pricing in for something sooner or later in the market. We have this was before Asia, but price in time when it comes to standard deviation. We accumulated, generated liquidity, manipulated, making our high. Asia then showed some of the displacement on a lower time frame. We draw back up, and then we accumulated a little bit more. We decided to dip towards, so not the hold on, accumulation, not the general idea on slow price was, but when I say price in time, we start to see that when New York opened, that's where it showed us where we actually was heading towards. London was just showing us the continuation, still kind of pointing an arrow at us, and then we just confused people. Stop loss hunt, and we have our market maker sell model, buy model. And I'll show you what else I see. So generate liquidity, not just with swing points, but also with PD arrays, as you guys can see. We manipulated into all-time highs, and then we had a quick move up and a quick move down. And we also see I'm on a 15-minute time frame, a pretty good wick with a body closure, something to keep your eyes on. Yeah, I'm fucking tweaking. My roommate is trying to get in or something. Bro, so sorry for the distractions right now. Accumulation, manipulating the all-time highs. We had a quick move leg up, quick move leg down, showing where the body wants to close. We then come back up to where the body closed as a price for target and reversal. That's what we're using right here. This is how you know you have a valid standard deviation. You're marking it from the manipulation leg. Our manipulation leg is from this high to this low. This high. I do swing point to swing point. You can also like argue if it's valid if it has a PD array aligned with it and it gets at least slightly tapped into for AMD models. But accumulation, manipulated into all-time highs, retrace into it, and then we consolidated when price and time aligned. New York market open, and we showed the full distribution. So then we had an insane sell-off by just looking at this window. What do we mostly see was sell-offs in an all-time high market with a bullish narrative. We have a bunch of buyers then that come into play, and then we would then have a retracement. This is on a 15-minute time frame. So this is your market maker model with AMD right here. Usually manipulation is towards a PD array or liquidity level. This happened to not have one because we didn't have a past history of the market. We don't have data on the left side. But this is an AMD model right here. If this is hard to see, using standard deviation. So in these marks, we would like to see a market reaction. You just highlight them as think of it as like little zones. And then the final little area. Market literally just dumps and kind of just like shrugs it off. But right here we do have a little small reaction. Starting to look a little bit sloppy. So standard deviation projections aligned with this area. How to know if your projections are valid now, because you have to set up the leg in a valid area, and that is in a manipulation leg. It's not that hard to know where the manipulation leg is. Look for AMD, bro. Accumulation, manipulation, quick move leg up, quick move leg down. Mark that one from the swing high to the recent swing low. Vice versa. I'll show you a bullish one too. This is a bearish. And then after your standard deviation is set, then use these as target or reverse levels. We had this as a reverse level box. I showed you on the 1 minute time frame where you could have had a trade. Use it as a confluence. And remember, a projection. What did I say to someone? It's a framework for price targets and reversals. Potential. It's not like a guarantee, but there is some guarantee levels though. So as you can see, our -4 reversal standard deviation showing us the level on where price doesn't want to go past. As you can see, our bodies are still in the price range on the higher time frames, and that's all that matters focus on the higher time frame, trade with the lower time frame using the same move, time frame alignment. So there's one example, and then I'll show you just one more example literally right next to it. So I'm gonna go on a probably lower time frame. You can mark your standard deviations in a manipulation area, which is most of the time London session. You can mark it from body to body or wick to wick. If there's insane huge wicks, just use body to body at that point. And how to know whether or not your standard deviation is valid. Do you have a PD ray in your leg, in your manipulation leg? Or is your -2 and negative, I think I have 3, right? If these levels are aligned with something, like my -3, -3.5 is aligned with a bunch of liquidity up here, original consolidation. So keep in mind, before market opened, what did we do? This was the lowest spot where you could have had an entry. If you know how to trade these price levels, you would be able to catch this leg. And then back to our original price target. This right here is my model using AMD, and standard deviations is what I use too. So price moved up all the way up here into our price areas. This is where I want the market to show no displacement. What do we do? Had even right here too. You guys can, like, once you see what AMD is, bruh, accumulation, and then always look for manipulation. Manipulation isn't random. We always manipulate generating new liquidity, retracing into an imbalance, or sweeping liquidity. Keep in mind, manipulation is never random. There's always the highest price target on where the market wants to push the price for institutional numbers. And then retail comes into play. Accumulated, manipulated into a PD array, and then we distributed. Set up your standard deviation. I use body to body. And I want to, like, sometimes align it with some things that I see. Like, we have a -4. I see this imbalance right here. -4 is down here. I would have this as my target to look for price reaction. Standard deviation, -3. Use that as a price level on where market doesn't want to show displacement. Remember, you're only focusing on the bodies. How is price reacting with these bodies? And then go into lower time frames and look if there's PD arrays left. AMD model in the AMD model in the AMD model. Market maker buy model, market maker sell model, sell model, buy. Holy chart. Standard deviation, again, is in a manipulation leg. You can use it as high time frame price levels on where you want to show your quote-unquote support and resistant levels. You align it with PD arrays or liquidity. You can use it as price targets and price reversals. Whether to know if it's valid, look for your manipulation leg market from the high. Literally, you can see it right here. I'll make it big so you guys can see exactly what I'm talking about. Manipulation is never random. We're always manipulating into a leg. My apologies. Got a phone call. Just gonna ignore it. There's our swing point. We made a swing low, a swing high, and then we have another swing low. But now we're just creating what? Our market reversal. This swing point right here, as you guys can see, was the retracement. Back into the displacement of bullish order flow. What did we do? Guys, bro, it's easy, bro. It's literally everywhere. This is my model. This is how you bottom tick, guys. Let me know if you want me to make a YouTube video of my entire model. Higher time frames, bro. Focus on the higher time frames. We hit a price level. What did price do with the bodies? Immediately reacted with all these buys. What do we do? Accumulate it, manipulate it into a PD array, as you guys can see right here. You guys can argue, oh, but it was tapped already. Yeah, but I don't count it as tapped in or mitigated because of how low it went, and it didn't even hit CE level of this. What did price do once we hit CE level? The bodies went literally back above the entire manipulation fair value gap zone. First percent fair value gap. Hold on. Bro, I'm not answering his call. Accumulated, manipulated. There's your accumulation. There's your low time frame targets. I'm literally showing you the high time frame with the low time frame alignment. If you don't, bro, literally just don't be a bitch and target this level. Stop loss at the swing point. Use the bodies for your stop loss. And fucking target this shit, bro. We're in a market maker model, bro. Higher time frame. That's only your entry. You just want to see what you can get. This is how you can get some insane standard deviation price levels, guys. Like, guys, bro. Like for real. Like for real. Sounds stupid as fuck, bro. But hey, man, if you can learn something from this, that's the only thing that matters, really. I know it seems a little bit sloppy right now, but I'm trying to show you with colors, you know what I mean? Like, trying to just make it bright to know exactly what to see. Until it gets to a point, guys, where sometimes you just don't need images anymore. But my charts, I always have grid lines. Always have something like this. And look at that, guys. You guys just saw right here, like, little manipulation area. What is it also aligned with? Let's see. I'm on a low time frame right now. Low time frame. There's a 15-minute right there. We have entire hourly gap right here. Wait. What do we do, guys? What do we do? Let me restart my chart on this higher time frame. What do the bodies do immediately? Fucking target all-time highs. We have all these swing points too. Don't be bitch. You're just so focused on the lower time frame, bro. That's why you get lost. Didn't I have a standard deviation placed over here? Again, wicks or bodies. It's shown in the same price range of this entire fair value gap right here. And it lines in CE area range. So what am I gonna do on this higher time frame? I'm gonna set a fucking limit and place it maybe onto the next standard deviation or this swing point. This swing point. And target lower time frame consolidation, or look at the real picture like a fucking man and target these all-time highs, bruh. Might get break even, might hit TP, price and time. What happens when time comes in? Holy fuck. Okay, so we got fucking edged, but target original consolidation or these swing points. A good 1 to 7. Either way, it's what greed happens, though. It happens to me all the time. Literally had a trade exactly like this. I'll show you. We edged this high. I'm not trying to go break even, bro. Ha. Yeah, I was salty. 23-minute video. Sorry for making it so long. If you guys can start to see the picture now, your trading will go a lot more easier. You have a good rest of your day. I'm hungry as fuck. This is my standard deviation video.